WTI is a buy in quad 3 because of bearish US dollar inflation. But why does the slowing of economic activity, less demand, not outweigh this?
Our model's not based on demand, it's based on money printing. So again, the inverse correlation between the dollar gold, dollar oil, dollar CRB raw, dollar CRB index, dollar against cocoa, dollar against coffee is all the same thing. So if you go back to 2008, which I think most of you would remind yourselves is the most obvious U.S. demand slowing, U.S. growth slowing period, where did oil go? Yeah. $150 a barrel, baby. Why? Because Ben the Bernanke, again, devaluing the dollar. So again, as you go quad 3 to quad 3, the best place to be, actually, as opposed to just on slide 75, you can just backtest this. As the Fed not initially eases, is as it's easing during quad 3, goes to the 4th and the 5th rate cut, you can see that the most manifest returns, i.e. the things that go up the most, are commodities. So that's the number one reason next to it backtesting as long energy and long commodities in quad 3. That's the obvious thing is as the Fed goes more deeply, it's a dollar trade. It's not a demand one. Thanks for the questions. You know, I could predict. I'm getting pretty good at predicting what you're going to ask me, right? Nobody's asking me about oil when it's at 63.64. Nobody's asking me about gold at 15.80. And then the panic comes in.
And also the other thing is
when it's down.
Everybody's worried about the negative side of fundamentals when it's down. But on oil, there's actually a positive fundamental story too, right?
Yeah.
Supply is slowing.
Yeah.
So
actually, an important thing too, and I went back and forth with this, of course, when you do like, I don't know, 25, 30 meetings in New York City with the world's smartest, and I mean that quite literally. Smartest doesn't always mean the best returns, but these people are obviously smart. And when you get like a vertical expert in something, there, which I spoke to plenty of energy people, the ones that still have jobs, and then generalists. And what I kept saying is, while this may be like hard to believe, and if Jim Simons was willing to explain why he trades oil or anything energy related the way that he does, it might alarm you too. We don't care about the fundamentals the way that the super smart people all do, okay? What we really care about on oil in particular is where the quads are, number one, again, where the signal is relative to the dollar, number two, and then supply, number three. So again, as we get deeper, you'll figure out that I actually don't really give a damn about demand.